Hey guys, what's going on? Today I'm actually going to be doing an accounting video for you, and this is by popular request of doing some of the accounting stuff in terms of trading of a non-current asset, closing off assets, and also creating a new asset. So we're going to be working through that today. So the exercise we're going to work through is exercise 14.11. That's on page 397 of your textbook. And in terms of your workbook, this is coursework. That's going to be page 358. I'll be working across on here in the answers. These answers will be uploaded to Compass, so we'll get that up there as well. And obviously at the end, please like, share, subscribe, all that stuff. Without further ado, I think we're ready to kick on. So I'm just going to go through the question in a touch more detail. So, trade-in of a non-current asset. So this is exercise 14.11. So on the 1st of May, a van purchased for $30,000 by Swing Sets had already depreciated by $20,000 and was traded in for $7,000 on a new van, which was purchased for or bought for $40,000 plus GST. So we got to add the 4,000 GST. This is from Dodge Motors EFT transaction 2119. So a few things to note here. Start of the month on the 1st of May. So every transaction happens on the 1st of May. We had 30,000 in the van. It was depreciated 20,000 and we got $7,000 for it. That tells us automatically there is a $3,000 loss because the carrying amount was $10,000. We only got $7,000 for it. So that's going to play a part. We also purchased a new van for $40,000, which incurs $4,000 GST. So that's what we're going to base all our information on. For A, we need to define the term trade-in. For B, we need to record the EFT transfer 2119 in the general journal. So we need to put all the transactions relating to that. I will do the narrations at the end. I'm not sure quite how that'll look because I know I am quite tight for space on the book. C, show how the van, accumulated depreciation of van, disposal of van, profit and loss on disposal of van, and bank accounts would appear after the disposal was posted to the general ledger. So we're just putting it from general journal to general ledger in C. And then D, define the term under depreciated, and then E, state two causes of under depreciation. So very similar to what we did in class on the 12th, on the 13th, my mistake, on the Tuesday double, where we looked at over depreciation. So this is the inverse, so to speak. So without further ado, I'm going to get moving across into here. So we'll get this up and running. I will have a bit of a summary for the tips. So for A, and I'm going to have the textbook on the side here. I've actually got it just off the screen so I can still refer to it because I do want to give you the biggest viewing area possible. Define the term trade-in. Now, if you go through your book, there is a definition there. Well, I'm just going to go very colloquially for this. So the term trade-in. The term trade-in means that a business is trading in one of their assets to purchase a new one. So very similar to what they do in regards to cars. Okay, that's a problem. I'll just fix that in the interim. Sorry, I just really want to get rid of that. I'll just cheat, just make that 11, honestly. There we go, just made 11. That's your general definition. We'll get on to B. We'll get into the really nitty-gritty stuff, and this is record EFT transfer 2119. So we need to put all the information on. So the first thing I'm going to do is I'm going to go the 1st of the 5th, 21. We only need to do that date. And the first thing we're going to do is set up the disposal of, disposal of van account. So we go disposal of van. If you're unsure what you need to name them, you can just cheat here and just have a look and see what the titles are, because they do give you a clue, which is quite generous of them. So disposal of van. And we're doing that based on the historical cost of the old van, which is 30,000. Yikes, that was a 0. And I made it 300,000. So that's disposal of van. That's always a debit because we're treating that almost like an asset, I think, for all intents and purposes, but it's very similar to P&L summary where it just holds in that account. So then we write off the old value. So we go van, and we go 30,000. That's transaction 1. Next, we're going to do accumulated depreciation. So we go accumulated depreciation. Now remember, accumulated depreciation of van is generally a credit transaction. To close it off, we need to debit it, and we debit it the whole amount of 20,000. Next, we go disposal of van, and we go 20,000. So that's part 2. Next, we're going to do the general trade-in. So this becomes van because that goes into the new van account. So at the moment, our van asset is 0 because it starts at 30,000 on our debit side, and then it goes 30,000 on the credit. It's balanced. But when we get the trade-in value, which goes towards the new van, which is $7,000, and that also goes on disposal of van, and that is a credit amount because that's the value we're getting from it. So we look at disposal of van and we go, have we made a gain or a loss on this? And quite simply, the gain or loss can be calculated by going, the debit side's 30,000, the credit side is 20,000 plus 7,000, that's 27,000. There's a gap of 3,000. So that gap of 3,000, what does that mean? Well, quite simply, it means for disposal of van, we need to credit another $3,000. That's what it means firstly. So I'm just going to tidy this up just while we talk. And we need to make sure that disposal of van closed off is a 0. So I'm just moving all these pieces around because I think I'm just going to do the annotations at the end. There we go. There's our disposal of van. We need that there. And lastly, we go loss. Loss on disposal of van. So we've got loss on disposal of van, and that's 3,000. And that's an expense. So we now know it's balanced. Obviously, if the disposal of van is a gain, so we've got more value than what it's worth, disposal of van would be a debit here, and it'd be gain on disposal of van, and it'd be a credit. So just remember that there. And this will go in our income statement. Now, next, we need to put in our transaction EFT 2119, and this is a bank transaction. So what we know is it's van. I'm just going to do a little trick. Look at this. Van. We know GST clearing is going to happen, and we know bank's going to happen. We know those 3 transactions are happening. So we're just going to work backwards on this, and we will get the right answer. You'll see. So let's look at it. The new van is worth 40,000. Of that 40,000, I got $7,000 of it already. So that means there is $33,000 left. Sorry, I'm just trying to get my book to display properly. 33,000 left. Next, I know my GST clearing is 4,000. I know I'm paying GST. If I pay GST, that's obviously an outflow. GST clearing is always treated as a liability, so if it's going down because it's going out, it's obviously a debit. And 37,000 balances it. And if we think about it, if we didn't get the $7,000 trade in, we'd pay 44,000. And a way to check that is add the 7,000. Ignore this. Add the 7,000. It'd be 40,000, 4,000, and if you add 37,000 plus 7,000, it's 44,000. So it does check out. So I'm going to do two annotations here. The first annotation I'm going to do is closing off, and I'm going to bold these. Van that has been traded in. Whoops, and that's going to be part of EFT Trans 2119. That's not good. That's really just displayed badly. So what I'll do is I'll just merge those across. There we go. Love to see it. Obviously, you're going to write this a lot neater than I am in your book. All right, let's do the next one. Purchased new van, taking into account previous trade-in. And again, EFT Trans 2119. Obviously, you don't need to do the separate ones. I am doing a combined one because I just really want to spell out, oh, hey, this is how it looks across both. So that's how I really want to spell that out. For C, we're showing how the van accumulated depreciation, disposal of van, profit or loss on disposal of van, and the bank accounts would appear after the disposal was posted to the general ledger. So all we're doing is, we're posting this to the general ledger after the general journal. We're just moving all this across. That is it. So everything's going to be May 1, and we're going disposal of van 30,000. That has not displayed how I want that to with the right formatting. I really like the right formatting because it just makes it line up so neatly. Alright, so disposal of van, and then we go on to the disposal of van accounts. And we do this. We do this, and we go van. 30,000. That is the first two transactions done. I'm just going to indent any credit transactions, to make it a bit neater. So we've done that. We've gone to van and we've credited it, wherever that's gone, here. And we've gone to cross-reference disposal of van, which is obviously here. So next we're going to do accumulated depreciation, very much one in the same. We're going 1 May, disposal of van, 20,000, and that balances. I don't need to do anything else for that. I might double line it, but I don't know how to double line on the fly here. So I go 1 May, and I go accumulated depin of van. Yep, cool, looks good. And we go 20,000. We then work our way down. So we've done this one. Net, we do van trade-in. And we see that it's disposal of van again, but this time it's the van. So we go disposal of van, 7,000. And then across here, no need for the date. We just go van. Oh, it's doing that thing again. Why does it not want to copy? I'll fix the formatting later. So your solutions will be fully formatted. 7,000. So So that's where we're up to here. Now we need to record the loss on the disposal of van. So we go to the loss on disposal of van. We see, that's May 1 again. And we go disposal of van. We know that we made a loss, and if it's a loss, it's an expense. And that will be 3,000. And that's because we need to balance this side. So loss on disposal of van, and it's 3,000. And we see, hey, this balances to 30,000 each. Now, very similar to the P&L summary, you need to be closing this off, so it needs to balance 0, which it does here. So that's all done. We've done these 4. And next part is we're doing van and GST clearing into bank. So let's go across, let's put the first one in, and that will be, where's van? It's here. We go bank, and it is 33,000. And I will close this account off just to show you what that looks like. So we go 33,000. Now, we also have GST clearing of 4,000, so the bank will be 37,000. So we go 1 May, and it's van / GST clearing 37,000. You could alternatively go van here, GST clearing here. I don't think it's too much of an issue either way. I can't see you getting pinged. I'm not going to close off the bank because we've done bank before. I will close off loss on disposal of van, and I will close off the van itself. So the first part is we see that this balances to 70,000. We see that balances to 70,000. So knowing what we know, we need both sides to be 70,000. The way to balance that is quite simply going 70,000 minus 30,000 gives us a balance of 40,000. And hey, wouldn't you look at it, that is the total of this, but factors in the amount we paid in cash for the van, sans any GST, and the 7,000. That is amazing. It actually adds up. And that's what we like to see. And you go back to the question, it says 40,000 plus GST, and everything checks out. Now, obviously, at the end of the month, you would go 31. Whoop, that's May 31, or 31 May. Oh, doesn't matter. Make sure you're consistent in the SAC, obviously. But P&L summary, and we go 3,000. And that obviously closes that expense, which needs to be closed at the end of the month or the period. However you want to do that is how you do it. So, on that note, let's move on to D. Define the term underdepreciated. So, underdepreciated, not underappreciated like your teachers, but underdepreciated is the, term, refers to, let's try that again, refers to when a non-current asset has not depreciated enough in value, hence being overvalued. So what causes underdepreciation or underdepreciation? There we go. Hence being over. Jeez. Spelling's hard. What causes underdepreciation? I think the first one is bad estimates. Residual value is too high. Inappropriate depreciation rate is too low. Alternatively, wrong method, I think, are the best two. So, for example, an example of under depreciation might occur if you use straight line instead of reducing balance, because at the start, straight line is obviously going to be less, whereas at the end it sort of catches up. So that's where inappropriate depreciation methods, and that can be rate all the methods there. So thank you for following along. Make sure you like, make sure you share, make sure you subscribe, because there are more videos. If you have any videos you want, please, please, please let me know. Otherwise, thank you for watching along. Stay safe. Look after yourself.